What is happening, DeRosa Insiders community? My name is Matt Faircloth, and this is the Cash Flow Digest Show. I'm going to take a minute and say thank you for watching this program. Whether you're watching this program live on YouTube, we are now back to going live on YouTube. So y'all stand back, put your seatbelt on YouTube. Here we come. We're coming for you. We're going live on LinkedIn as well. So if those of you guys are watching live on LinkedIn, give me a shout out and say hello. And if those of you guys are watching on our regular scheduled DeRosa Insiders community, we love you guys too in that. So make sure that wherever you are, you stop in and say hello, and that you join that you check out DeRosa Insiders on Facebook. Go to Facebook and look up DeRosa Insiders. That is our private but free community for dedicated to real estate investing conversations and all that cool stuff. And we do lots of giveaways and cool things on our DeRosa Insiders Facebook page. If you guys are watching this, take a minute, go to Facebook, go to join DeRosa Insiders. This program also goes live on Spotify. So if you guys are watching this program on Spotify, thank you. Make sure you give it a thumbs up, a like. Tell Spotify how much you like this program, so the other people that are following things on Spotify can hear about the program and they can like it too. That's what we got, guys. We're going to be talking all kinds of real estate shop today, all things cash flow, how you guys can generate more cash flow in your life and in your businesses and take your real estate business to the next level. What I like to do on this show is I like to talk about some things going on in the world. Feel free to make a comment or drop it or anything you guys would like to say here on these things. But I'm going to be talking about a current event, and then I like to bring a guest on. Then we do a little bit of video to teach you guys some other things, maybe a little teaching moment here. So let's get going with the Cash Flow Digest program. Thanks again for watching, guys. So, guys, a bit of data here. I want to put it out, and my man Nabiku, for those of you guys that are watching live, will hopefully be able to get you guys a link on this. There's an interesting statistic. The amount of houses for sale, and you might say you know why, and that's cool, but let's discuss it anyway. The amount of houses for sale in the United States is at an all-time low, and that's an interesting statistic because people still got to move. People still got to do what they got to do, right? But there's a number of factors as to why it is. And I'm not going to tell you all the answers. Y'all need to go click on this article that my man Nabiku is going to post for you guys. Real quick shout out to my man, Eric Cooey. How are you, Eric? Good seeing you, buddy. Eric was on a free mastermind we had earlier this week, talking some real estate shop. We do free masterminds pretty regularly. If you guys, by the way, I'll throw a curveball out there, Nabiku. We do free masterminds on a weekly basis, twice a week, actually, to talk real estate multifamily shop. You guys want to be a cool kid like Eric and join our free and join one of our free masterminds to talk real estate and to talk real estate investing, and also talk about how the DeRosa Accelerator program can help you get to the next level. If you're interested in all those things, let us know. Send us a line at info@derosagroup.com, info@derosagroup.com, and you too might get a free seat in our 1-hour multifamily mastermind program. Stay tuned for more info on that as that continues to roll out. Now, back to housing. So the demand for housing has increased in the United States, but the supply, so we're having a supply demand issue. Maybe that's why housing prices have not really shifted too much, even though interest rates have gone way up. What's interesting is that as housing continues to become a thing that people need, there's less and less people selling their properties. Well, let's unpack that a little bit. If you were someone you're looking to sell your house today, or just looking to unload your property, you got to go somewhere, right? You got to go from where you are now, and that could be a property. And this sounds logical, but let's still think about it, right? If you're looking to sell your home now, that you're at 3-4% interest rate, or maybe you've paid it all the way off, or whatever it is, wherever you're going to go is likely, at least more than a 50-50 shot is going to have a mortgage payment to it. And that mortgage payment is now you're going to have the luck of paying a 7% interest rate for where you're going, at least 7, if not more, right? So most people that are looking to sell their properties are going to be paying much more interest rate than they are today. More than ever, the elderly are aging in place. More than ever, people that have had their kids exit their homes and have moved on to college or whatever are choosing to not move. Well, why? It's because they don't want to, because wherever they go, they're going to be subject to higher living costs because of interest rates. What that's done, and we still have a need for more housing in America. What's happening? We have an aging millennial population. They're starting to have kids, starting to make the babies. They're starting to need backyards for the babies to run around in. They're starting to need playgrounds down the street from where they live for those babies. And millennials are starting to need more space. The other problem is that the boomer generation that have plenty of space are not looking to sell anytime soon because they don't want to go moving to somewhere and pay higher interest rates. So we're having a supply demand issue for housing in America. The bigger developers, those that are building houses, are already trying to solve some of these things by allowing you to say, okay, well, if you buy one of my properties for $500,000, that's pretty much the median price for a new construction home. Because I'm not me, Matt Faircloth, but the developer will say, well, what I will do is I will buy down your interest rate to where you get a reasonable interest rate, 4%, 5%, something like that on a mortgage. So there's creativity coming in to create some absorption for people so that they can buy homes. That's how much people are trying to make things work. But until people either just say, screw it, I'm just going to just sell, or until rates come down a little bit, we're going to continue to have an inventory issue with homes in America, and that shortage is perhaps why you're not seeing a correlation in the drop in housing prices and those kinds of things, given the interest rates. Let's face it. Somebody that was gonna pay $2,000 a month in a mortgage payment on a home today for that very same home, no change in value, it's going to cost them $3,500 a month, right? And so the cost of housing in a monthly payment perspective has gone way up, but houses are still selling, and that's because people don't have a lot of options. If you want a nice home in a nice neighborhood, and that, so those that have the income to afford to pay for new construction can. Those that can't are going to have to really, really pick and choose, and maybe still do bidding wars, even with the high interest rate environment we're in right now. Changing world, right? Check out the article that we're posting here. If you guys missed it, if you guys are watching this on Spotify, just jump over to DeRosa Insiders. You guys can grab a copy of the article that we just posted. So thank you to BQ. Love to hear what you guys think. So post your comments on, bottom line, guys. Why is housing inventory still so low? Why are prices remaining high on single family homes for the most part? Yeah, they've dipped a little bit, but nowhere near what they maybe should have given how much interest rates have gone up. Love to hear your thoughts. Guys, changing gears, we've got a phenomenal guest today. We're going to be bringing in someone who's going to be talking about just everything from just finances and the ways to kind of build wealth long-term, incorporating tactics like real estate, but also incorporating other things into your portfolio, and really about just perhaps getting professionals to help you. That's what, in some ways, what DeRosa does is helps people place passive investments in real estate. That's the arena we're in. We're going to talk to somebody today who has a more overarching approach that helps people place dollars in all kinds of different things so that they can build their wealth, because you could just go up and try and figure this out on your own. But it's very important, I think, to have professionals that know what they're doing, like us at DeRosa Group, that know real estate, and folks like our guests that know overall financial planning and help you achieve your real estate, your overall wealth goals. So guys, let us welcome to the show and bring in our guest today, Brent Boden. Brent, how are you today?
Doing great, Matt. Thanks for having me.
Yeah, good stuff. So for our audience and for our listeners and whatnot, please take a minute and introduce yourself.
Yeah. So my name is Brent Boden. I've been in the industry for 16 years as a certified financial planner. Also have a number of acronyms behind that. So I deal with the behavioral side of finance as well. And really, my goal of getting in the industry was really just to help people understand all the aspects of their finances, from early financial planning through tax benefits and estate planning. What do you need to have? How do you diversify? Because a lot of times, we've worked with clients that have everything in one bucket, like a 401k, and that's not the best place. We all see markets going up and down throughout time, and we want to make sure that you have access to some sort of funds or income that you need at any given time. And so a lot of times that's diversifying.
Mm-hmm. What are, like, as we unpack this, right? Like, just given like just like, let's start at like just layman's terms advice, right? What are, as you meet new clients that you work with, what are some of the biggest mistakes you see people make when it comes to financial planning that you, of course, as an expert, need to help them untangle and whatnot? But like, what's the most common mistake you see people make when it comes to just achieving their wealth goals or, trying to get to the next level with regards to their finances?
Yeah, that's a great question. I think mindset is probably one of the very first things.
Hmm.
Something that doesn't really have to deal with your finances directly, but it can deal with your entire life. Is just, are you ready to make the next step to get you to the next place you want to go? And so a lot of times, people come to us after a life event, whether that's a marriage, a divorce, or having that first kid, lost a family member, whatever it is they've just not had the right mindset to what they want to achieve. And so we really help people from a goal-based aspect is, how do we figure that out? And how do you make steps to get there? So I would say that's probably the easiest part. It's not easy to get to where you want, but it is easy to change your mindset a little bit. And that can start from budgeting or debt payoff. It can go all the way through, how am I saving? Am I saving? And have I started early enough? Now, obviously, time is one of our best proponents. And if you can start early, you got more time on your side to be able to achieve what you want.
I got to tell you, some folks that I talked to, Brent, for the first time, and this is just like, friends and family even go there, but also potential investors and that kind of thing, about just, I'll ask this simple question. Well, what's your monthly expenses on average? What did you spend on average per month for the last 12 months? 100%. I don't know. Right. Well, it depends on the month. Yeah. Well, give me the median, give me the average expense of what it should be. Everyone should know that. You should know what your average expenses are. Factoring, you can't say, well, it depends on whether or not it's December for Christmas because you got to buy Christmas presents. Yeah, I get that, but that's not a good enough excuse, because it also depends on whether or not it's July and you want to take your kids to Disney World, right? Every month has unexpected expenses, and not knowing what your median expenses are, including housing costs. But I mean, that's easy. That's, everyone should know, of course, what their housing cost expense is, but that's that's maybe a third of the equation. Knowing that other 2/3 really helps them know financial, just their real financial literacy, and helps them understand what's next. I can tell you, for my wife and I, we really weren't able to start setting aside money for investing until we were clear what we were paying monthly, and to say, okay, we have this much extra. That, how it goes, man. If you don't focus on that, like you said, financial literacy, and also you said mindset, right? Most people may end up with an extra $500, $1,000 in their pocket by the end of the month, but guess what? Gone, right? If you don't pay attention to it, you're going to blow it. How often do you see things like this, of people just not watching where things are going, and then you blink your eyes and it's out the door, right?
You're exactly right, Matt. I mean, the biggest part is that if you're not paying attention to it, it's super easy to go out and blow $500, right? And so the idea is that you've really got to make sure, I think if you're early in and you're just kind of starting to get what a budget looks like, is very different from an ultra high net worth client that has plenty of money coming in, but maybe they don't use it wisely.
Yeah.
Or they do, go out and buy that car whenever they want, and they can do that. The downside is, if you don't know it on an annual basis, at least, what are you spending, which should include the majority of those one-off expenses for vacation or a car or anything like that, right?
Sure.
What does that average out to? And how much should you have left at the end of the day? If you get to the end of the year and you get that tax bill and you don't have it set aside already, that's a problem, right?
Yeah.
And so all of those factors come into play. And it really does sit down, and you have to, at a minimum, I think an annual budget is a good thing for a lot of people. And
Absolutely.
that way they can kind of break down what that looks like in smaller chunks.
Yeah. I totally get that. And what's interesting, Brent, is those that are listening right now are probably thinking like, well, Matt and Brent, that's all well and true for people that like earn, a lower side of the average median income of where they are. But people that earn plenty of money, like doctors and lawyers and those folks, they don't have those kinds of problems, do they, Brent? Like, when you meet with high income people that are making well into the six figures, like I know you work with a lot of docs. I can't wait to unpack a lot of that with you, because doctors are just this unique breed of folks to deal with regards to their investment strategies and things like that. But it's a misunderstanding to think that those that earn more money don't still have financial, literacy issues, or that they still don't, like they still don't know how much they're spending in expenses on a monthly basis, right?
Exactly right.
Bad habits just become still bad habits when you put more zeros on them, don't they? Right?
Yeah, and I think you make a good point. So one of the reasons I like to start with kind of mindset and what are your values, what are you're driving towards, is because a lot of times we bring in some of our parents' bad habits too, right?
Yep.
And so you have no idea exactly maybe how to to work with money other than what you either saw, maybe you learned something, or you read a couple of books. And all of those can often be competing ideas. And so how do you mold those together for you? And everybody's journey is different.
Yeah.
And so the great thing that I love about planning is that it allows us to unpack a lot of those. I don't care if you sit down with a glass of whiskey or a glass of wine, kind of talk with your partner, or at least have some ideas and write them down. What are you wanting to achieve? And then you can start to change your mindset of how you get there. And so those are the first steps of financial planning for a lot of people, is just kind of sit back and understand where you're at. And that can be for somebody who isn't making the kind of money they want today, or it can be for ultra high net worth. And a lot of times you get in these cycles where you haven't looked at your finances in 3, 4, 5, 10 years, and you're just spending what you're bringing in, and you're not thinking about the future at the moment.
Yeah.
And that's a lot of times where we see people is how do we get you back on the path so that you can have financial success?
Absolutely. So you had written you've written a book recently, or maybe a while ago, about tell us a bit about the book, why you chose to write the book, and tell us about the book, why you choose to write it, and the feedback you've gotten so far on it.
Yeah, absolutely. So wrote the book about a year ago. It was published. The idea probably started a little over a decade ago. I've been working with medical professionals most of my career, mostly because I have a lot of friends, family that are kind of in that medical field. And a lot of times they're high debt coming in, but they're going to make a ton of money. And so how do they structure that right? How do they get things paid off and kind of on the right path? And so the book that I wrote, Physician's Financial Checkup, was basically, what are the steps you need, the building blocks to get to financial success? A lot of those are very similar for business owners. It's a lot of the same type of advice. The idea is this is broken down a little bit more for high debt, because that's where most of the doctors come from. And there's not a lot of financial advisors out there that have a niche in working with medical professionals. And there's over 1 million doctors in the US, 22 million healthcare employees, and there's only about 270,000 financial advisors. I can tell you that not all of those are professionals in medical or business owners, right?
Yeah.
There's probably very few. And so using kind of the experience that I've built up and a lot of those same questions that keep coming up, the idea was, how do you talk to those people? And, there's a lot of niche things they can do because of the amount that they're going to make, but making smart decisions and mapping that out for them helps achieve success even earlier than what they would have experienced on their own.
Yeah. So going into the doctor in America is one of these unique financial animals, right? That likely earns a good bit, and as they should, man. A lot of these folks are out there saving lives every day, right? So God bless doctors. They had to go to school for a very, very long time to get where they're at, and that. So they should earn a lot of money. Let's just say that, right? A lot of people should earn more than they do, but doctors certainly should earn plenty of dollars. But on top of that, doctors almost always have a financial burden, unless they just came from a ginormously rich family. They're likely graduating from medical school into a world where they're going to have a big student loan, right? What do you typically advise the medical professionals that you work with to do with that student loan? Is it like, are you doing like, for what I've seen, people that don't have the student loans that doctors do, like get that paid down, because then you can take the money you were paying it down with and invest it into other assets and things like that. What do you typically advise a doctor to do with this major, use the word albatross or whatever it is, just financial obligation that they have for their student loans?
Yeah. So there's a couple of issues there, right? As you talked about, they're in school for a lot longer than most professions.
Yeah.
So when we talked about time, they're already behind the 8 ball. The amount of time that they have is lower. And so we got to kind of do this on a quicker basis, right? But a lot of times they also don't have any financial literacy training. So you think about a doc who's coming in, they're maybe mid-30s, just starting their career, a couple $100,000 of debt. They've lost time. We know they're going to make some decent money, but how do they accomplish both? It really requires a balancing act. Part of that is you don't want to leave free money on the table. And this probably goes for everybody. If you have a match at work, 401k, 403b, whatever it is, make sure you're at least putting that money in, because you're getting free money from the employer for the work that you do. So obviously you want to balance that with how do you pay things off quicker? Kind of the magic bullet is have a plan. I'm a bigger fan of what's called the avalanche method. So the avalanche method basically says pay your highest interest rate debt. Try to get that paid down first.
Yeah.
It's a little bit more mentally taxing. If you look at Dave Ramsey, he calls it the snowball method. And what they do is pay off your small ones first. I don't need to pay off a small 0 interest loan, right?
Yeah.
That one's okay. But that 12 or 20% credit card, I need to get that thing paid off quick.
You do.
And so understanding how debt works is really a big part of it, is you want to pay off those high interest rate ones, get them paid down quick. And if you can make a payment every single check, especially on those compound interest loans, you're paying it down faster. And so, in the real estate market, sometimes they call it kind of the 13th month method, where you pay an extra payment each year, or you pay it twice a month. Those are compounding interest loans. The reason you're doing that is to hit it before some of the interest is actually going to the account. Get those things paid off early, right? So it's no different than that. It's just understanding it, having a game plan, and honestly celebrating when you win.
Yeah.
That's the hardest thing. It goes back to the mindset, right? Is if you're not celebrating when you have opportunities, it doesn't keep you on track as well.
Yeah.
So that extra $500 at the end of the month, throw it on there. Have a glass of wine, celebrate it.
Let's unpack, or as I've been saying, we kind of start saying phrases, right? The phrase I've been saying lately is double click, right? So let's double click on real quick, paying your house off, right? Yeah, I get it. Under like today's interest rates, yeah, man, you probably should 7.5%, right? But the home I live in has like a 3% interest rate, right? And a lot of people watching do, because rates were very, very low for a while, right?
Yep.
And so does paying your house off make sense? Because I've heard other philosophies about it, like that. Well, your cost of capital is 3% on your home. I could also take the whatever it is, $500 a month that I want to send towards my mortgage company to pay it off faster. I could take that and invest it in anything that outperforms 3%, right?
You're exactly right.
What are your thoughts?
Yeah, no, it definitely varies, and that's where having some personal financial advice helps. If you're at a 3% or under, honestly, you probably shouldn't pay it off.
Yeah,
you can get a savings account at 5% today, and so why would you put the risk of putting it in your house? It just doesn't make sense. And your house hopefully is going to grow in value anyway, and so it doesn't make sense. Now, if you are dealing with a 7%, 8% mortgage, then maybe it makes more sense. But I also think it depends, because if you can take on more risk in the market, potentially you can get a 9, 10, 12% return. It's a balancing act again.
Yeah. I like that avalanche method you had said, because maybe you got credit card debts that's costing you 18%. I mean, I've even seen credit cards now, Brent, at 24%. Can you believe that? Yeah. And
I think just a quick point too on that is the avalanche method does not require you to make extra payments. It's just doing it a little bit more often so that you're hitting that interest early, right? And so you can keep making the same payment on your mortgage, but if you hit it twice a month, now you have to get a little ahead, right? We can't be behind the 8 ball trying to do this, or you're going to get late payments. We don't want that. But if you get a little bit ahead of it and start doing that every 2 weeks and hitting that principal, then you're getting it down. And so I think it does depend a lot for each person. But I agree with you. If you've got a 3%, honestly, love it. Sit there, enjoy that mortgage. That's fantastic.
Pivoting over to a new topic here, because as real estate operators, when we're approached by passive investors that want to put their money, sometimes doctors, sometimes not, one thing we bring up on a regular basis is tax benefits for investing in real estate, because I can apply depreciation losses to their gains and things like that. And so you might not actually have to tell the IRS you made all the money that you actually made. You might be able to make this much and tell the IRS you made this much. Or, hey, if you really play your cards right, tell the IRS you actually lost money and need a negative, and that negative can get applied to other things, right? That we in real estate understand that side of it, but I get from a financial planner, you got to be a little more microscopic and talk about general tax and stuff like that. What are some other tax tactics you bring investors large and small, or clients large and small to you that come to you? And I get, we got to keep the country running, so we do have to. Paying taxes is not a bad thing, but you don't pay more than you should, right? So what are some tax benefits and deductions and advice you end up giving a lot of your clients in that, or just what should people look out for?
Yeah. So I always tell clients, I want you to pay the lowest fair share that you can, right?
Yeah.
And so, a lot of times we work with CPAs to really understand, especially if you're a business owner, you've got multiple real estate a CPA is still going to be the best. The downside is CPAs tend to look back. We tend to look forward. And so having a team that can do both of those is really good. From a tax standpoint, there's lots of different things that you need to be aware of from an investment standpoint. Obviously, you've talked about a couple of them from a real estate standpoint. And I think I'll jump back real quick. My investing philosophy is diversification in general.
Mm-hmm.
So you don't want all your eggs in one basket in anything. I think that includes having 401k or IRA money, having as much in a Roth, hopefully, as you can, because I don't believe taxes are going to go lower in the future. And then having non-qualified assets that you can access at any point. Now, especially from a non-qualified standpoint or a brokerage account for a lot of people, is there's going to be taxes that are pushed through in that. The way that we manage it is from a really understanding of trying to offset any sales of capital gains with capital losses so that you're able to keep as much of that money non-taxable as you can. It's not always the case, but we try to do that in any place that we can. I think the other aspect is adding some alternative investments. So real estate's a great one to your total portfolio. We also look at private credit, hedge funds, farmland, all kinds of things that have deductibility off of your account.
Oil and gas, I think I don't invest in oil and gas, but I've heard oil and gas has some tax benefits as well too, correct?
It can. It's also really interesting from a volatility standpoint. Sometimes getting out of it's not as easy. So we kind of, for every individual client, we will balance the liquidity need, the income need with what you have. Certainly ultra high net worth clients, a lot easier to look at oil and gas. And, sometimes we have wine and whiskey investments. So
I got a buddy, he's buying into ATMs, Brent. Can you believe that? And that's the thing, not individual one-off ATM, like funds that own, hundreds of thousands of ATM machines across the country. And that, cause that's an investment vehicle. There's a lot of things you can invest in. And a good financial planner, like your firm, is one that folks should go to, because it sounds like there's not going to be just hey, let's see how much of your money I can put you into different facets of Wall Street. And diversification means owning Google and Apple in your portfolio, right?
There's no silver bullet. And so you got to stay on top of all of it. And I think that's the biggest thing. And from that tax benefit side, a lot of it is just understanding your specific tax investments. And so part of our planning process is on an annual basis. We do a review with our clients of their tax documents so that we make sure this is what happened last year. You still got time this year. Can we make some adjustments and moving forward? And obviously keeping an eye on the current situation with elections is, 2025, a lot of these tax benefits sunset. So if you're looking at estate planning today, you need to hustle up, because there's not a lot of time left to make some of those.
No matter who gets elected, it's going to change. Right.
That's right.
So now, and let me ask you to just kind of like, I wouldn't dare ask you about the election or whatever. Let's just put that away in that. But let me get you to pull out your crystal ball here and tell me, because I just love crystal ball questions and stuff like that. Because who knows, right? Let's just hear what Brent thinks. Where a lot of things have changed in the world in general. There's been disruptors. There's been all these kinds of things come in. Obviously, our industry at real estate investing has changed a lot. Let's look forward the next 3-5 years, right? Where do you see the financial planning world change? Do things like AI come in and help out and become to help your industry become more efficient? Is there where do you see the financial planning world change over the next, say, 3 to 5 years in the very, very changing world that we have in front of us today?
Yeah, absolutely. I think the amount of information that you get is obviously changing at a rapid pace to where it was when I started 15 years ago. And so you have to incorporate that, whether that's AI, which I think is not going to take away the human advice element, especially from a customized standpoint. But we saw, 10 years ago, robo-advisors started. The downside is that everybody's portfolio looks the same. If you're a moderate investor, it's going to look like your neighbor down the road. We don't think that's the direction where things go. And so we are incorporating some AI in the background that helps us be more efficient as advisors. So whether that's gathering data, being able to see that at a faster pace and boil it down to what we want for our clients, I think that's going to be a huge benefit over the next 3 to 5 years. Taking the mundane aspects of financial planning, data entry, all that kind of stuff, we're going to be able to do that much faster.
Yes.
And honestly, when we do that tax software, we use a company that uses some AI in the background to see what's happening within tax software. So
Mhm.
There's a lot of benefits, I think, in AI that's coming.
Yeah.
The thing is, service industry has been growing at a rapid pace, right? And so I don't think the service industry necessarily gets altered by that. It just changes how the service industry works. And so what
Mhm.
we're keeping an eye on from an investment standpoint is where can AI make efficiencies better, and how can you invest in those type of opportunities to be able to produce it? So obviously you've seen NVIDIA the past year or two, there's just been a rocket ship from a stock standpoint. And
For
honestly,
now.
if you just held that, you'd love it, right? But the downside is there's a lot of companies that are also in that AI market. And I think knowing the small players sometimes have more upside and knowing where those are going to go. And so
Yeah.
that takes a lot of data research and boil it down. And are you willing to take that risk? Because
Yeah.
obviously with investing, there's always option of loss, just like real estate.
Yeah. I think that it's, what I've seen, Brent, is that you look back at financial planning over the last like 25 years, right? A while ago, when I was a kid, the only way that like my mom or my dad could have been exposed to stock market benefits would have been through going through a financial planner, or by knowing somebody and taking a ginormous risk and calling up the Wolf of Wall Street on his phone and buying a pink slip to buy an to buy an off the market thing or something like that. Um, at the end of the day, the access to investments and the access to information, I think, has changed a lot of things. And so now, just about everybody has some sort of financial planner working for them, where they have a 401k through their job. There is certainly a financial planner you can access that runs that 401k. They can give you some advice. And if you're savvy enough, you can have a person like yourself that is like a real advisor, a consultant you've got on the shelf that's there to help you achieve your goals, right? So the access to help is more at our hands, and also the access to information is more at our hands. So like you said, NVIDIA, people that don't own stock at all, like they could go walk up to the roulette wheel and go buy some shares of NVIDIA off of E-Trade. But they're way better off talking to financial advisor about NVIDIA, and hearing about other companies that use that, as you said, maybe rising dark horses behind NVIDIA that may end up growing just as fast, if not faster, than NVIDIA has, right? That information would have been 20 years ago, would have been 100% insider trading information nobody would have had access to. But because you and I have the magic internet box and Google and everything like that, that you and I could very quickly, if I just go online right now, say, who are the competitors to NVIDIA? Okay, let's pull up their stocks, look at their charts. Within an hour, you and I could become pretty good, not use the word experts, but we could become versed to make a good decision with my financial planner at my side. Secondly, you throw in information that are non-stock related things. Back in the day, to invest in things like real estate and whatnot, yet again, you had to know somebody. A lot of times real estate stuff ended up getting traded at country clubs and everything like that. And you were in the air quote, good old boy network, right? That network's really, I mean, it's still there, but it's become way less prevalent. It's in a lot of ways gone, because you can find out about investing in everything you listed: alternatives, oil and gas, as you had said, real estate, ATM funds, or funds, like you said, for crazy stuff like buying a portion of a whiskey company if you want, right? You can do all those things, and they're more prevalent, more accessible because of the internet, because of the prevalence of information in the world. So I think the financial advisors are going to be really folks that are going to be able to kind of break out their binoculars and help someone with, yes, this is how we balance it. I hate to say this, just because in America we don't teach people how to do this. This is how you balance your checkbook, client, and this is how you save some money and pay the bad bills first, and like you said, avalanche method and all those things, right? So financial planners, I think, are going to become more overall macroscopic financial consultants for people, and not just someone that I go to when I want to buy some stock, or when I invest for retirement, or when I want to invest for my kid to go to college. I think that your industry is going to become more of a holistic macroscopic service company that's going to help me, balance my checkbook, make sure I'm not paying more than I need to in my bills and everything like that. Maybe companies like yours offer like micro bookkeeping services or something like that, right? And then go all the way out. And maybe there's services your company could offer that are outside of Wall Street. They could advise to say, I like for your portfolio, I like self-storage, and I think you should look into self-storage facilities. Here's some people that I know of that I've vetted and that I like and everything like that. I can make some introductions to you if you'd like. What are your thoughts on that, about the evolution of the financial planning industry to become more of a macroscopic service to folks? Not just here's how to buy stock, but here's how you really achieve wealth and financial freedom.
Yeah, I think the visionaries of what we do started, back 50 years ago, and saw that people needed more advice. And so that's really the reason I got in the industry.
Good way to say it.
To be my client's CFO. I like when a client calls me and says, "Hey, I'm looking between this option to buy a house. I've got a couple different buckets. Where should I take it from? What's the best use of money?" Right? Because then we're ingrained in what they're doing. They understand that we kind of have this macro vision of what that looks like, but we also have a micro vision of their personal finances.
Yeah.
And so I think, for our industry to be there, we are turning into more service and less stockbroker.
Yeah.
You don't call us up anymore and say, "Hey, can I buy X number of shares of whatever?" For most people in our industry, that's pretty much dead.
Yeah.
And so a lot of it really is turned toward, how do we give you the advice, the tools to manage what you need and do it efficiently. And so our firm is great on that. We're on the front end of the tech side anyway, but we have that human advice element that I think is really unique. And we're national. And so we really bring in a lot of those pieces to the puzzle to be able to make sure that everybody's getting the right advice at the right point they need it. That's the other thing too, is it's not just access to it, it's access to when you need it. I will say the one downside of being able to Google everything is there's misinformation too, right?
It's not all facts on Google. You kidding me?
So does that apply to me?
Right.
I don't know. Right.
Yeah. Right. That's unfortunate. You probably have to detangle. Like when one of your clients probably leads in with like, "Well, I saw this online. I watched a YouTube video about, or I saw this one article about," or something like that. You're like, "Okay, let's bring it back down." Okay.
Send it to me so that I can check it.
Yeah, I will fact check that for you. Thank you.
That's right.
Cool. I also commend you, by the way, just to underscore something. Not many financial planning firms that I talk to will say that they're using AI on their back end, artificial intelligence, to make things more efficient in their company. The fact that your company is doing that makes you guys a lot more cutting edge than a lot of other firms that are out there.
Yeah, it allows us to deliver the level of service that clients want in a much faster and more efficient way. And so there's no reason to shy away from it. I actually spent some time in the old bank world. And that's the one downside that I saw in banks, is that they just move so slow and everybody is a square peg in a round hole.
Yeah.
And unfortunately, that's just not the best way to deliver that type of service. And so, in the real estate market, not everybody's the best fit, but when they are, you want to be able to give them the best advice. And that's the same thing that kind of goes for us, is not every tool that we have available is for you, but let's build the car that's the best and looks like what you want and get you to your goal.
Absolutely. So hey, Brent, this has been a great conversation. Could you please give us a bit of information on how anybody listening here would be able to track you down, and pick your brain a little bit further about their financials, or maybe to pick up a copy of your book dedicated towards medical professionals, whatever it may be? How do folks get a hold of you?
Yeah, so BrentBoden.com has the book on there. You can also reach out to me. Any questions you have, you can direct them through there. You can also find me on YouTube. And I also do have a podcast with the same book title, Physicians Financial Checkup.
BrentBoden.com. And guys, everybody take a moment and listen to the Physicians Financial Checkup. Listen to that podcast. Yep. And go to BrentBoden.com, pick up a copy of the book, and they can contact you and access your firm on that website as well, correct?
Yep.
Great. Guys, plenty of financial advisors out there. Not many that I hear of are on the cutting edge and are really looking at finances more holistically and everything like that. So, Brent, thank you for your conversation today. I really enjoyed having you on the Cash Flow Digest in today's conversation.
Matt, it's been a pleasure. I appreciate it.
Cool. Thanks. Guys, there are so many choices you have on financial planners and everything like that. And so I recommend that you guys choose wisely. Talk to folks like Brent to make sure there's an alignment in your goals and everything like that. We're not in a world now where you have to pick what's in front of you. You can do plenty of research and pick firms that are out there to do good and to help you really achieve real overall growth as Brent's firm does. So guys, everybody go to brentboden.com to hear more about his firm. Guys, I'm going to transition now. We're going to hear more about a debt fund that DeRosa has. And my man, Jacob Sandoval at DeRosa, our investor relations manager and equity growth manager, has recorded a little diatribe for you guys to tell you guys about the DeRosa fund called the DeRosa Income Fund, creating cash flow. Just produced over 10% for our investors last month. What? Day one, folks are getting in and getting over 10% the first day. So how are we doing it? Jacob, tell us about it.
What's up, everybody? This is Jacob Sandoval, the head of investor relations for the DeRosa Group. We are transforming lives through real estate. We buy large apartment buildings and generate passive income streams for our investors. We've been doing that since 2005. We currently have 150 million in assets under management and just under 2,000 units in Kentucky, North Carolina, Pennsylvania, and Minnesota. But I'm here today to talk about a different investment vehicle, debt funds. So if you're an investor looking for different ways to generate passive income for yourself, you've come to the right place. So what is a debt fund and why should you consider investing in one? Well, if you've ever owned a piece of real estate, whether that's real estate that you purchased yourself or if you invested passively into a multifamily syndication, you were an equity owner. And if you were lucky enough for that real estate value to increase and for you to sell that property, then you benefited and you cashed in on that equity, which is awesome. But there's also another group that's making money in real estate, and that is the banks. See, most real estate is purchased with a loan, or what's also referred to as leverage. It's one of the superpowers of real estate. You put a down payment, you borrow the rest of the money from the bank, and you pay the bank back with interest, of course. So when you're investing in debt funds, you are in a way becoming the bank. Your investment dollars goes into a fund, and that fund lends money out to operators, and those operators, after they execute on their business plans, are paying you, the investor, back with interest. In its most basic form, that's what a debt fund is. For example, at the DeRosa Group, one of our current investment offerings is the DeRosa Income Fund. With our fund, we pay an 8% preferred return plus profit share to our investors, and we make those distributions monthly. So it's true mailbox money for you, the investor. To date, we've raised over $5 million for the fund, and we've paid out over $250,000 in monthly distributions to our investors at an average annualized return of 9.4%. How many of your investments are paying over 9% in today's market? Oh, wait. The DeRosa Income Fund has funded a variety of deals across the United States. We have a Dunkin' Donuts in our portfolio. We have a warehouse deal in our portfolio. We helped to build a brewery, and we've helped to develop housing across the United States. So this is the strength and the benefit of investing in these funds. When you invest in a fund, you're not investing in a singular deal, but you're getting diversification across a variety of deals across the United States. The DeRosa Income Fund also provides a great deal of flexibility. After being invested in the fund for 12 months, the investment is completely liquid, which means that you can withdraw from the fund at any point in time. And also, we have the option to compound your returns. So if you don't need the cash right now, you can elect to have your distributions reinvested back into the fund, which will allow you to generate an even higher return over time. If you want more information on the DeRosa Income Fund, you can book a call with me in the link in the description below. We're also hosting a live Q&A webinar for the DeRosa Income Fund on May 24th at noon Eastern Standard Time. We'll go super in depth on the fund and see if it's a right fit for you and your investment goals. So we hope to see you there. So the $1 million question is, are debt funds right for you? And here at the DeRosa Group, we believe so. We feel that investing in the DeRosa Income Fund or debt funds in general can be a great addition to anyone's portfolio. Maybe you're a retiree who really depends on the cash flow that's generated from your investments in order to pay for your living expenses, in which case a debt fund is a great way to generate consistent passive income on a monthly basis. Or maybe you're someone that has a large amount of cash that's sitting on the sidelines. You're not sure where to invest, and it's only sitting in a bank account where it's getting very low interest. You can put that into the DeRosa Income Fund or a debt fund where it's going to generate 9-10% on your money. and you can figure out where you want to place your capital over the long term, but at least put it into a debt fund where you're going to be generating high interest so that you're protecting your nest egg from inflation. Or maybe you're a stock market investor or somebody who has invested in multifamily syndications, which are much longer term investments. You can consider putting money into an income fund to kind of diversify your holdings into a more short-term, more liquid, and more cash flow generating vehicle. So whoever you are, investing in debt funds might be the perfect way to add cash flow and diversification to your investment portfolios. That is it for today's video. I hope you guys learned something and found the information valuable. If you want to learn more about debt funds or see how the DeRosa Group can help you generate passive income, you can book a call with me in the link in the description below. I will see you guys in the next video. Peace.
Guys, great presentation from Jacob. I really love what he had to say about DeRosa Income Fund. And I also love what he had to say, guys. Take this to heart. Those that are making money in today's real estate market are, yes, maybe people buying and selling deals, but the lenders, 100%, are at the very bottom of the capital stack. They're the most protected. So why would you as an investor not want to be a part of the capital stack as well? It is an accredited only fund right now. We do have some non-accredited stuff on the way, but you do have to have a pre-existing relationship with DeRosa to invest in non-accredited stuff with us. So make sure you have that and get to know us and build that relationship over time with DeRosa. If you want to invest in a non-accredited deal, we have DeRosa Income Fund is for accredited only, but it is producing great cash flow that's super secure and in a market where really super secure is a good place to be. So, guys, great conversation with today's guest. Make sure you choose the right financial planner who can help you achieve today's goals. And make sure you check out his book and go to brentboden.com, BODEN, brentboden.com to hear more about what he has to offer. And guys, I'd love to hear your thoughts and comments in the comment section, either on YouTube or on Facebook or wherever you may be watching this program. Why have housing prices stayed high, even though rates are high? And that, is it because of inventory? Is it an inventory issue? I don't know. Let me hear your thoughts. That's what I've got for the Cash Flow Digest today, guys. Thank you for watching yet again for a great program here. Really grateful to be broadcasting live back on YouTube with all my friends there and back on LinkedIn. Stay tuned for this program, which is every Friday at noon Eastern. Friday at noon Eastern on Facebook, on YouTube, and on LinkedIn. We're gonna keep coming to you guys live with phenomenal guests every week. So I will see you guys then. Thanks for watching, and make sure to check out this program on Spotify too. Take care, guys.